This is the Retirement Mentality channel. This is a place where I talk a lot about real estate investing, and I've been saying ever since COVID hit, like more than 2 years ago, that prices were not going to crash. I was the only one saying it. People said COVID will crash real estate prices. It didn't happen. Prices kept going up. Then people said that forbearances were going to crash the real estate market because nobody had to pay their mortgage during COVID and everybody was in forbearance and there was going to be a flood of foreclosures, and then real estate prices were going to crash. And that didn't happen. And so I've been right for over 2 years now that prices were going to keep going up. And now everybody says that we're in this huge real estate bubble and the bubble is going to pop. Are they right? Was I wrong? Finally, the people who keep predicting a crash all the time eventually are going to be proven right. It might take them 10 or 20 years, but eventually prices do come back down. Is the real estate bubble about to pop? I'm going to tell you what my thoughts are right now.
Shut up and sit down.
I'm going to use some data to back up some of my thoughts on this. And I always say that all real estate is local. So I'm going to focus in a little bit, instead of just focusing on the whole country, I'm going to focus in on Florida. I own a bunch of properties in Florida. That's where most of my rental properties are. So I'm going to zero in on Florida. So I've got some statistics here. I'm going to use Florida statistics. I'm not going to drill down to my specific neighborhood or town where I like to invest in. I'm going to focus on Florida, but overall, this concept is going to apply to pretty much wherever you live, USA. And if you're in a market where prices have been going up, then this whole concept will apply to your real estate market too. In Florida, the S&P CoreLogic Case-Shiller Home Price Index showed a 19% jump in housing prices in 2021. The Florida Realtors year-end report echoed these findings, showing a 20% jump in home prices in 2021. So two different people, two different data mining companies, one of them Realtor.com and Florida Realtors, and the other one Case-Shiller. So they both said home prices in Florida in 2021 went up 20%. And if we go back even farther, it says that in a 5-year period, Florida real estate prices have gone up 69%. So almost 70% over the last 5 years. When you see gains like this, everyone says they're not sustainable, they can't keep going on forever, and everybody's just expecting and waiting for the crash. The problem is, what if the crash never comes? A lot of people got rich during the 2000s, during the dot-com crash, when the dot-coms went down 90%. If you had cash and you were sitting on the sidelines and you anticipated that, you got rich. In 2008, if you anticipated the housing market crash and you sat on the sidelines with cash, you got rich. All these people that have been sitting on the sidelines since COVID hit are getting priced out of the market. So is the bubble going to crash and save their ass because they've been waiting and waiting and waiting? If you watched my last video, you might know the answer, what I'm going to say. But I'm going to say no, and I'm going to explain to you why with some more data. I'm going to use data, not feel-good reasons of why the housing market's going to crash or not crash. You see, the people that are comparing this to what happened in 2008 or the dot-coms in 2000, everybody wants to draw parallels, and then they always say, well, this time is different. The people like me who say the reason that it won't crash are the people they always say, well, you always say it's different, and it's never different. All the core principles are the same. But I argue that they're not. See, during the Great Recession, or back in 2008, as the prices were getting higher and higher and higher, and everybody was getting FOMO, fear of missing out, and the banks just kept thinking, another loan is another stream of income coming into our pocket. Everybody was crushing it. Everybody was getting rich. People were putting contracts on houses and then selling them and making a profit before they even owned the house because prices were going up that much in 30 days or 60 days. You could just put something under contract, let's sign the contract and sell it and make a profit without ever even having to own the property. So it was so easy, and prices were going up so fast, banks couldn't see anything coming in the future that could cause a problem. And they were giving out no income, no asset, no job loans. And they called them ninja loans, no income, no asset, no job. And so people that couldn't afford houses were buying these houses. And then the price would go up $100,000, or the value would go up $100,000 over the first 6 months or year they owned the property. They'd refinance it. They'd pull the money out. They could pull that money out. And then they were going out and they were buying a new truck or a boat or whatever, going on a trip around the world. I owned a mortgage company during this time, and I had some of my clients that I said I should get them a punch card. They were refinancing their house so fast, so many times, just pulling all the equity out. And that's exactly what they do. I remember they would come back and be like, we bought a boat and 2 4-wheelers and we want to get more money out of our house. They just treated their houses like credit cards. And the money was so easy to get that nobody had any equity in their properties. I myself fell victim to this. I was trying to build a real estate portfolio, buying houses with no money. I'm doing 100% financing loans. And when the prices started to come down, when the recession started to hit, everybody just got caught off guard. And so everybody tried to sell their houses before the prices crashed. And so there was a flood of houses that came onto the market, and they couldn't sell their houses, and they lowered the prices. And all of a sudden, because they had no equity, they couldn't lower the prices anymore, and nobody would buy the houses. And so that's where all the foreclosures came from. All right. So good story, Jeff. We already know that's what happened. Fast forward today. See, the banks learned their lesson in 2008, and they tightened up their belts, and there's no such thing as ninja loans anymore. There's no such thing as no income, no asset, no job verification loans. So people put 20% down. People showed they could afford the houses. And people that have bought if you bought a house 5 years ago in Florida, like I just said with the data, it's gone up 69% in value. If you bought a house last year, it's gone up 20% in value. So if you bought a $200,000 house last year, it's worth $240,000 today. So if the recession hits and people start to lose their income, or people are citing the fact that now that inflation has hit 8.5%, people aren't going to be able to afford to make their mortgage payments, and we're going to see more foreclosures. All right, let's assume people can't afford their mortgage payments because 8.5% inflation has hit. We have very low unemployment right now. So, people aren't going to just lose their jobs. All right, let's take it one step farther. Let's say worst case scenario, these people need to sell their house because they just can't afford to make their payments. Well, they've got somewhere between 20 and 70% equity in their house, assuming they put zero down. If they did a 3% FHA loan when they bought it last year, that means they have 23% equity in their house. If they put 20% down and they bought it 2 years ago, that means they have like 40 or 50% equity in their house. So they can drop their prices down quite a bit before the house gets foreclosed on. But we have something else. We have a supply and demand issue. So we still have demand way outpacing supply. So even if a number of people need to sell their house because of inflation, there's so much demand, at least in Florida, that those houses will get gobbled up like this. So I can't see anything causing a foreclosure, a flood of foreclosures. Not inflation, there's too much equity in the market. The banks learned their lessons from before. On top of supply and demand issues, how much equity there is in the market, how much demand there is out there. One more factor is, since the 1960s, over 20 million people have moved to Florida, and the pandemic and being able to work remotely is making that curve go like this. And to put it into perspective, since 1970, only 2 million people have moved to New York. So the population in Florida is just exploding. So more and more people, it's more and more demand, it's more and more pressure on the market. So I just don't see how a bubble could burst in the Florida real estate market. You can compare it to the market where you live, if you live in Arizona or Washington State or wherever. And if you want to find out, one of the other things I talk about on this channel is how to retire early using real estate. So if you want to try to do that, if you want to try to get out of the rat race, get out of the grind, and retire early using rental income, go and watch this video over here, and I'll tell you exactly how I did it, and you can do it too. Thanks for watching. Give me a big thumbs up if you like this video. If you think I'm wrong, leave me a comment down there and tell me why you think I'm wrong, and we can talk about it. But I'll see you in the next video. Thanks for watching.